Hi everyone. Today we're going to talk about fixed and variable rate mortgages. Very timely topic today given the interest rate environment. So when you're a mortgage borrower looking at fixed versus variable rate, the key things you need to consider are the cost of those mortgages, not just the rates today when you're getting into the mortgage, but what the cost of that mortgage may be over time if rates were to change, your risk tolerance, what's your appetite for interest rate risk, for instance, and qualification. The rates can be different on those mortgages, and what does that mean for how much mortgage you can qualify for? Let's take a quick look at what these two types of mortgage are. Fixed rate mortgages are ones where the rates stay the same for the entire term of the mortgage, meaning your payment's going to stay the same. So they give you that sort of predictability and stability of a known mortgage payment for the entire life of the mortgage. Variable rate mortgages are ones where the rate will change over time as the prime rate changes. As the Bank of Canada changes that prime rate, if it goes up, your mortgage rate will go up. If it goes down, your mortgage rate will go down. There's two main types of variable rate mortgages. One type has it so that your payment will change every time that rate changes. Others, only available at a few of the banks, are a fixed payment variable rate mortgage where the payment doesn't change, but it doesn't mean you're not taking interest rate risk. You still are, because the underlying components of that payment, the principal and the interest, change. So it may lead to an increased cost for that mortgage when rates go up, just like with the other variable rate type. Pros and cons of each. First, fixed rate mortgages. The periodic mortgage payment remains the same for the entire period of the mortgage. So that gives you predictability and stability. It allows you to plan, allows you to budget, always knowing what that payment is, and you can sleep easy, have peace of mind knowing that you're not exposed to any interest rate risk. The cons are, if rates do decline, you don't benefit. There's also usually a higher interest rate at the time that you get your mortgage for a fixed rate mortgage than a variable rate mortgage. It's not true 100% of the time. It's not actually true today, in fact, but most of the time that is the case. And they usually come with higher prepayment penalties. The interest rate differential calculation used in a fixed rate mortgage creates a penalty that's often higher than the 3 months of interest penalty that is present with a variable rate mortgage. Pros and cons of variables. Pros, if rates decline, the cost of your mortgage declines. You benefit when rates go down. And like we already mentioned, not 100% of the time, but variable rates are usually lower than fixed rates. So you can get a lower rate at the outset of a mortgage with a variable rate most of the time. And they have lower prepayment penalties, the 3 months of interest that was mentioned. The cons are now you're exposed to interest rate risk. Some people don't want to have that in their primary residence. Some people are more comfortable putting that into, say, a rental property. But for your primary residence, it may not be the right thing. If rates increase, the cost of that mortgage now has increased as well. So also, if the rates increase, it could lead to you taking longer to pay off your mortgage. So there is risk embedded here. And because you're taking that risk, you now have to think about interest rates over time. You have to monitor it, make sure you understand what's going to happen to your mortgage, and maybe you might even make the decision to convert it to a fixed rate to get rid of that interest rate risk at some time. So you don't get the peace of mind that you get with a fixed rate mortgage where you know that you don't have that exposure. So which mortgage type is best? Well, there's no simple answer to that because it really depends on your own personal circumstances and your own risk tolerance. So any advisors out there, and there are some who always say that one type is better than the other, aren't really thinking about you personally, not doing their job. So the things you need to consider and consult with your advisor about is your risk tolerance, your need for prepayment flexibility, because prepayment penalties can be material. Qualifying using the different rates. When the rates are different between these mortgages, what does that mean for how much you can qualify for, and the general economic environment? What's your comfort with taking interest rate risk in the economic environment that we may be in at the time? So when does each of these mortgage types make the most sense? Fixed rate mortgages make sense for borrowers who have a low risk tolerance, which is most of us. Want to lock in a rate, not have to worry about rates over time. And you plan to stay in your home for the duration of the mortgage, so you're not going to have to worry about prepayment penalties. So predictability and peace of mind are a priority for you, and that is the case with most Canadian borrowers, and that's why fixed rates are commonly more popular than variable rates. Variable rates are for people that have a higher risk tolerance. They may think rates are going down, but they can be wrong in that prediction, and they can afford to be wrong. That's a very important thing to note. Rates could increase unexpectedly, as we've recently seen, and that can cost you money, so you need to be able to afford that. Or someone who just needs prepayment flexibility because they might have to pay down their mortgage before it matures, and they want to know they're not going to get hit with a very significant penalty for that. And at the time of qualifying, in the normal circumstances, variable rates are lower than fixed, even though it's not true today. And that can help you qualify for a larger mortgage. So remember though, the mortgage type you're choosing is your own personal decision, and don't let an advisor try to convince you to take a mortgage type that you're not totally comfortable with. So you want to talk about these issues or anything else related to your mortgage, or just find the best rates in the market, we're the people to talk to here at Frank Mortgage. Call us on the number here, or find us online at frankmortgage.com. You can also scan this QR code to book an appointment directly with one of our mortgage agents. Thank you.